Agribusiness. Brought to you by Bank of New Zealand. Committed to agri for more than 160 years. With over 100 agribusiness partners across the country, BNZ is local and ready to support your business through the seasons.
Welcome to the CountryWide podcast, where we dive into the latest issue, and this particular one is Autumn 2026 out in mailboxes and in stores around the country. In each of our CountryWides, we have our very good detailed agribusiness section. And I was looking probably for an opportunity to reach out to this contributor who'll be known to many of you in the industry, Andrew Watters, who's been around with MyFarm for many, many years, particularly just around a pulse on the horticulture sector, but more so who's investing and where, and it led to his thoughts around foreign investment. And Andrew joins me now. Thank you for your time.
Hi, Sarah.
Hi, and your contribution to CountryWide, actually, it's been a really great piece. So just for those who aren't aware about MyFarm, where is MyFarm at now in terms of as a business?
Yeah, I guess our roots were in taking sheep and beef farms and converting them to dairy, but way back in the 90s. And we followed that through with, opportunities to buy land and dairy farms in Southland and Canterbury through to about 2012, 2013, when we then had a couple of very difficult years and the sector stagnated for about 10 years. So went through that difficult period. Farmers were worried about cash flow and certainly returns didn't support land pricing at that time. So we thought about our roots, which was land use change and development, and obviously the next level of potential value beyond dairy farming is and can be horticulture. So yeah, we kind of pivoted. I mean, personally, some of us still have dairy farm assets and very happy to these days. But yeah, we kind of pivoted and looked at some of the major sectors. So kiwi fruit, Marlborough Sauvignon Blanc, a little bit of rural commercial property. So we own a bunch of chicken sheds, have had and continue to have some investment in forestry, including Manuka forestry. And then we kind of dabbled in a few areas, avocados, cherries, hops, and rocket apples, which we may get to talk about. So, yeah, I think when you look at horticulture in New Zealand and agri-investing, the big industries are dairy, sheep and beef, kiwi fruit, viticulture, particularly Marlborough Sauvignon Blanc forestry. And some of those sectors are more investable at times and less investable at others. But the big horticultural sectors of kiwi fruit, viticulture, pip fruit, do have a sustainable future. And so that's kind of where we've ended up pivoting to. So back in 2014, we were running about $600 million worth of dairy farms. And today we run a bit more than $600 million worth of everything else but dairy farms.
It's a good way of putting it. And you highlight around that growth where horticulture has outpaced dairy growth in the last 10 years, growing by 100%, just pipping it as a pun. But one of the things you've pointed out is the strength of local capital that's driven a lot of development. What have you seen on your time around capital's appetite?
Yeah. I mean, Kiwis love development and love creating value, and that's what drove a lot of the dairy boom back in the late 90s and early 2000s. New Zealanders flocking to the South Island to develop some great quality assets. And in particular, the kiwi fruit industry has been very strong. There are certainly some family businesses that have grown, but there's also been what I call family corporates and investors, a bit like MyFarm, that have been quite prominent in that kiwi fruit sector. So Southern Cross Horticulture, there's ourselves, we've built up $250 million worth of kiwi fruit operations, Bay Gold, Origin Capital. It's been a bunch that have tended to bring together New Zealand capital plus some overseas capital, to get some quite big investment entities together. So that's probably kind of the best example. Obviously quite a bit of Kiwi capital gone into developing the Marlborough Plains as well. And then in pip fruit, range of larger family businesses, the Bostocks and so forth, that have got involved. So yeah, it's been successful entrepreneurs and family businesses leveraging sometimes other people's money to make investment, because as soon as you get to horticulture, land can be the cheapest thing. So it's actually all
Yes.
the infrastructure that goes on top, and so you end up, even with a 20, 30, 40 hectare development, needing a lot of capital.
So, what's your thoughts on foreign investment and the model currently on the table by this government?
Yeah, we and my farm enjoyed a relatively permissive environment through 2009 through to 2013-14, where, there was always a bar around the quality of the applicant, who they represented. Is this good quality money with good quality people behind it? And then the test, or the benefits to New Zealand test that exists, was relatively permissive for, buying a dairy farm and, you know, perhaps putting in a rotary cow shed, doing some drainage, that sort of thing you could get. So we had quite a bit of German and Swiss capital come in through us at that time, and some in UK. There was a bit of Chinese investment money around. Shanghai Pangshin, I think they were the renamed themselves, but yeah, that kind of got caught up in politics
Hmm.
and a bit of xenophobia maybe, and the political parties changing, that became quite problematic. And then I think another government party also came in and started tightening up around environmental rules, so quite almost made it impossible to do a dairy farm conversion, which had always been the staple of overseas investment. So it became, for probably 10 years or more, almost impossible to do a dairy purchase through OIO. One's
Mm.
just occurred. So I think whilst the rules are the same, the way the rules are being interpreted have become easier. And it is quite possible to buy a block, very possible for an overseas investor to buy a block of land and put kiwi fruit or cherries or anything on it. But it is a faff, it is difficult. And one of the issues that probably people don't realise is $50 million Kiwi for an overseas investor, with hundreds of millions of dollars coming at them from pension contributions. $50 million just isn't much money. It's not enough. And so if you go around accumulating all these small blocks, it just becomes a lot of work. And so they look between New Zealand and Australia and see, over Australia, well, I can buy much bigger block sizes. I can do 500 hectares of pistachios, or, not mucking around with a 20 hectare apple block or something here in New Zealand. And then there's this question of, so getting in is I think there should always be an approval step, but timing takes too long. Kind of the blocks. It should be more like forestry, where they had permission to go and get a range of properties up to a certain capital size. And then on the other side, if I sell it, let's say I build up a portfolio of apple orchards, when I come to sell it, who's going to buy it? So yeah, I think by our calculations, there's at least 15 billion of additional investment needed if the government wants to realise its goal of doubling horticultural exports. And some of that, maybe a third to a half of it, will come from local capital, retained earnings, and maybe not. But I think we really should still have some standards, but an easier overseas investment regime, because we want the growth. It's the growth which creates jobs, creates taxable income, creates revenue for the government to spend on hospitals, law and order, and all the other things we want. They can't, as somebody pointed out, they can't take the land away. Most of them have got very high standards around ESG, environment, labour, etc. So, yeah, I suspect the current government would have loosened the regulations a bit without the influence of New Zealand First, who kind of very, anti that foreign ownership piece.
It's going to be a very interesting election and the way that the cards fall right across the board. Interesting. I'm just looking at that growth period of 2015 to 2025. Half that came from a period of permissive overseas investment, and the other half was under quite a strict regime that was quite value driven. So around that doubling of export value over the next decade, where do you think that the investment needs to go as opposed to scale? Like, for instance, Rocket is an example.
Yeah, I mean, Rocket's an example where there's some overseas capital into Rocket, but yeah, they've got a very strong proposition in theory, a beautiful red apple. I remember having one in my drawer for 12 months and I took it out after that and you could still eat it. It's very energy dense, crisp, tasty apple. And what they sell for a good price. It's just the crop volumes have grown beyond, their sales capacity. And I don't think COVID has helped them. But yeah, if we've got a good idea, then we really, as New Zealanders and anybody, you really need to focus on execution and, clearly in hindsight, their sales and marketing program. So we produce little tubes of Rocket. Might be going a bit off piste here, Sarah, but we produce little tubes of Rocket. They were selling for $1.60, $1.80, kind of break even most people as $1.05, $1.10 a tube. And yeah, a couple of years of receiving 60 cents is very, very, very difficult. So this is one of the points with horticulture as opposed to dairy. Dairy, cows graze every day. They're milked every day. The tanker picks up the milk every day or every other day, and we get a check. We get a check at the end of the month, and the price is not always as good as we like, but we've got successful exporters that can sell the product and seem to be doing good job. As soon as you get into horticulture, it's a perishable product, and you've got to make sure you've got really good, strong sales and marketing. So clearly, Zespri does. Viticulture industry is going through its stress at the moment, but at the end of the day, Marlborough Sauvignon Blanc, it's very productive. It's relatively low cost to operate, and it's a light, summer wine, which has probably still got plenty of scope and capacity. So, it'll be all right, in the short to medium term.
What's your experience like with the New Zealand versus foreign investment appetite for the volatility of the primary sectors, subsectors, in terms of return and patience with return?
Yeah. Part of it is how you design investments. So MyFarm's history is as a syndicator, so we find an industry that we like, partners that we can work with, and then a property that meets our quality criteria, and then wrap all that up into an investment model. Experience with probably most syndication structures is that you can manage, a bump in the road and maybe two bumps in the road, but after a third bump in the road, and sometimes it's out of your control, it's difficult to retain, investor confidence and an ability to keep reinvesting. If you're in a fund structure, sometimes those bumps in a road could be a hail event or some other thing. So if you go into a fund structure like we've done with our kiwi fruit, what happens on an individual property doesn't really matter because there's kind of ups and downs in the portfolio, and one orchard might be down, but another's up, so it doesn't really matter. It's just those structures with a bit more scale have more legs in terms of being sustainable. So with institutional capital, from what I've seen, yes, in theory they are patient investors, but sometimes the people in these institutions change, and an investment was somebody else's idea, and so they have different challenges. And sometimes you can see it in corporate New Zealand, people just decide, oh, well, we're not investing in New Zealand, so whatever we own, we'll sell. So yeah, it's kind of a different flavour. There's nothing like a family business with a long-term commitment, intergenerational commitment to handle, ups and downs of farming and growing. So that's the reality. Farming capital is amongst the strongest. Outside capital from New Zealand is probably okay if it's got the right structure, and then overseas capital, yes, they can have patience, but then you've got, people changing.
Yeah, there's obviously a lot of capital sloshing around the primary sector with the capital return for Fonterra shareholders, and they'll be looking for lots of different places to put that, including investing in something that they understand as a tangible industry that it's come from. As syndicated businesses and managed portfolios like MyFarm, what should you expect as a range of return?
So we always think that the first place for money to go is either into the bank or maybe to pay off the mortgage. So if you're not doing that, there needs to be a reason for it. It could be because you want to diversify your income streams for future succession problems or solutions, or it could be that actually you want a better return. So we always think that we need, for a lease-based investment where you don't have any operational or price risk, somebody else is taking that, you need a margin of about 4% above money in the bank. So that's kind of 7.5%, 8%. And then as soon as you get into operational returns, you probably need a 5 or 6% margin above that. And then if you're going to do a greenfields development, you might need an 8% margin. So you can kind of see 7 or 8%, for our poultry sheds, for example, leased to Tegel. There's some nice tax benefits, so that's positive. Kiwi fruit, big industry, very successful. Zespri's a machine. So, 7 to 10%. Those are kind of the sort of levels. And look, I think it's possible over a 10-year period to earn a 7 to 10% off dairying. Maybe it's going to be possible to deliver something like that off halter beef, perhaps. It's hard to see those sorts of returns from traditional sheep and beef
I love
farming.
how you call it halter beef, like it's a branded new farming system. It's great. I've just been writing all about it for Beef Country magazines in terms of,
Yeah. Oh, my son-in-law is having a good close look at it. So, and I suspect, we'll produce a good supply of halter suitable calves for him off our dairy farm.
Yes. The model's definitely emerging quickly and stacking up on the numbers for sure.
It is.
Yeah. Oh, well, thank you, Andrew. That's it's been a great yarn. And for those who want to have a read of the article for our members, it'll be in the link below on the podcast. But also, it's always interesting to stay in touch, Andrew, as things chop and change in this wonderful world we live in called the primary industries. And
it is the backbone of New Zealand, and I don't think it would take a lot of thought to get us going harder. Yeah, we tend to muck around the edges a bit. In some senses, we need to be left alone, but in other senses, a little bit of overseas investment would create a bit of liquidity in the farm property market, which would help farming families upgrade or downgrade or wherever they are in their succession pathway. So, it's been a pleasure to talk, Sarah.
Yeah, wonderful. Thank you so much.
Out on the farm, the right support goes a long way. Speak to your local BNZ agribusiness partner for insight and expertise you need to farm through the seasons.